Hi, I'm Robin Azugi with Douglas Elliman Real Estate, and I'm very excited to have you here today for a town hall meeting. We started this meeting due to the fact that we've had a lot of inquiry about the market today and people trying to understand what's happening during this pandemic. So we opened up to have a lot of people come and ask a lot of questions. So hopefully today we will be able to answer most of the questions. There's a chat at the bottom or side of your screen, wherever you have it. If you have any questions during this time, please just type them into the chat and we'll try to get to almost all your questions. So today we have a great panel of industry experts here with us today. And we're going to discuss the ever-changing real estate market and what's going on during this pandemic. So let me give you a little background about myself. Again, my name is Robin Azugi. I'm with Douglas Elliman Real Estate. I'm in the Central Nassau office, which is located in Plainview. However, I do handle almost all of Long Island except for the Hamptons and Montauk in that area. I have over 30 years of sales and marketing experience. I love working with sellers and buyers, and I'm happy to be here to help answer all of your questions. We've taken a lot of this time, being that we are working out of our homes mostly, to really keep ourselves abreast of what's going on. With every day, it's ever changing. So hopefully with the panels here that we can really, again, answer most of the questions that you have. Jennifer Alisi is my partner, and here she is. She's going to speak a little bit about herself.
Thank you, everyone, for being here as well. So myself, too, I am a real estate agent with Douglas Elliman, also out of that Central Nassau office. I have approximately 20 years of experience with real estate as well as marketing, and I'm a lifelong Long Island resident, so I absolutely know the area. Although we're out of Plainview, as Robin said, we really handle most of Long Island as well. Dedicated to customer service, we'll work endlessly for our clients. Robin and I know buying and or selling a home is an extremely stressful time, and we're here to try to make it as seamless and smooth as possible. We're both a big fan of absolutely no surprises in the transaction. So that's what our goal is, and we work all the time with everyone to reach that goal. Let me hand it back to Robin so she can introduce our panel to you.
Great. So first we have on our panel is Mr. Joe Toscano, who happens to be our manager from our Central Nassau office. He is a licensed associate broker for Douglas Elliman Real Estate with 23 years experience in the Long Island residential real estate market. And Joe is known for his very, very, very strong ethics, integrity, and excellent training, as well as partnering with like-minded agents. And I personally can attest to him being a phenomenal manager and really understanding the real estate market today. So Joe, I'm going to hand it off to Jen, and she's going to talk about the next panelists that we have here.
So Richard Jarvis, we know him as Ricky. He is one of the top producing loan officers at Citizens Bank, and he's been in business for about a half dozen years, and he has funded over $100 million. He specializes in residential and purchases, refinances, transactions. I know he was working with everyone, and no matter what evening or weekend, he's right there for basically any question and trying to make any issues or problems disappear.
That's great. And the next panelist that we have is Leonard Greta, who we know as Lenny. And Lenny has practiced, he's a real estate attorney, and he's practiced law for over 18 years and spent the last 16 years engaged in a multiple of real estate related matters. His experience ranges from commercial and residential real estate transactions to insurance defense. He's very well-rounded. He's dedicated to his clients, and I can totally attest for that, whether they be buyers, sellers, and as always provides a personal hands-on approach. And he keeps his clients and his best interest at heart all the time. So thank you everybody for being here today. And we are going to start off with Joe Toscano, and he's going to discuss where the market is going.
Well, thank you so much, Robin and Jen, for hosting this town hall and for the invitation and for the great panel that you've set up. I think you're doing a great service to the community. So I just want to say thank you and how much I appreciate you putting this all together. Health and safety obviously are top priority. So before I start talking about anything else, I just want to mention that hopefully everyone on this call hasn't been affected by the recent events, and everyone is always in our thoughts and prayers. And at the same time, the goal really is for us to start to instill some confidence again in the real estate process. I think that that's an important part of the reopening of our state and our county. As a manager with Douglas Elliman, I've been on countless calls and meetings and conversations with industry leaders from Manhattan to Florida to California, Westchester, all over the country. And I can tell you from several weeks of those conversations, especially the past 3 weeks, one thing is really, really crystal clear to me, and that is that Long Island, especially our area, where our prices are, is in a perfect position for a strong and robust real estate market once some of these restrictions get lifted. I see it as the result of a combination of a few things: low interest rates, low inventory, strong buyer demand, an increase in remote and virtual working, people working from home and not needing to be in the city or needing to be near the city because they're working from home more often, is really causing a surge of buyers to our local market. I was on a meeting yesterday, and I know Robin and Jennifer were there as well, Ricky as well, with the National Association of Realtors chief economist, a man by the name of Dr. Lawrence Yun. And he said a couple of things that I made some notes on, and I thought they were worth sharing here today. He said that he expects inventory shortage to continue for the next few years in the mid price range real estate markets, which is our market, right? Where we're under that $1 million mark, and our average prices generally are between $500,000, $600,000, $700,000, and that's the market that he's speaking to. A couple of other interesting takeaways that I got from his talk yesterday was that, and again, this is across the board. This is again the feeling of a lot of industry experts. Real estate typically has a seasonality to it. You have a big rush in spring market, and buyers and sellers looking to make their transactions happen before the end of the school year, and then you typically get a little bit of a lull in July and August. There's still transactions, still things happening, but not to the level that they are usually in February, March, April, and May and June. And then again, another late push in September, October, and the first part of November. Nobody really expects that to be the case this year. There's really not that same expectation of seasonality, and we're really expecting there to be a strong third and fourth quarter. So everything that would have usually happened up until this point is simply delayed a little bit, and it's going to keep the real estate market going and keep us all very, very busy, right through the end of the year. The biggest takeaway that I got from that talk yesterday was, and Ricky, this is really going to be something that you can speak to, but the economist said, grab the 30-year fixed mortgage now, because with all of the stimulus that the government is putting into the economy. They're basically printing money. And when that happens, history tells us that there's always a certain amount of inflation that is to follow. And that inflation isn't going to happen right away. It could be delayed a little bit, a few years, but everything rises with inflation. Prices of goods, services, real estate, everything rises with inflation. But if you lock in to that 30-year fixed mortgage now, the only thing that won't rise is that monthly mortgage payment. And I thought that was really excellent advice. And as I said, we're all here to try and reinstill some confidence in the process and help to answer your questions and put your minds at ease. If you need to buy a house, sell a house, or simply just ask a question, it can be done, and that's what we're here to help you with. So again, I just thank you, Robin, and thank you, Jennifer, for putting this all together.
Thank you, Joe. That was wonderful. I really appreciate that. So I'm going to speak a little bit about how to purchase a home during this pandemic. And there's a lot of different scenarios that can and cannot happen. So basically, as far as the sellers to see a home, each seller, it's on a case-to-case basis. And it's completely up to the seller how they would like to handle their own home. So let me explain that. The homeowner, the real estate agents are not allowed to meet with the buyers and tour them around the home. So being that said, the seller has to agree to allow a buyer to see their home. And in order to do that, we would give the seller the buyer's contact phone number, and they would then make the arrangements to see the home. But the real estate agent would not be there. However, what we can do is we can be FaceTiming with you throughout the tour. So that's one way to do it. But not every seller is comfortable with that. So basically another situation that we are doing, and this has been working quite well, is we are allowed to go into a seller's home as long as they're not there. The house has to be vacant. So we cannot be with them in the home at the same time. So if a homeowner is to leave for the day, we are allowed to go into the home, the real estate agent, and we can do a virtual open house. And we can invite people to come and see the home that way. That's another way we can do it. That's why I'm sure some of you buyers that are out there right now, you've been looking at a lot of homes virtually. Some buyers aren't always comfortable, and many buyers aren't really always comfortable purchasing a home without sight, unseen. And they are looking at the virtual open houses or the virtual tours online. But when they feel really interested in that home, they want to see it. So then that's how, that's what we've been seeing. And that's the trend, is that they're looking at this virtually, but when they feel like, wow, that's a really great house, I really, really want to, that's a possibility, I'd like to see it now. And that's, again, it's really completely up to the homeowner though, if they're comfortable allowing that to happen at that time. We don't have a solid date or time period that this is going to lift. As real estate agents, we would hope that it would lift tomorrow. However, that we can't really answer. We don't have a crystal ball. So, we are thinking possibly in June, but we really do not have an answer. And I don't want to say a date to you unless I felt very confident and comfortable knowing what that is. Other things that are happening that will hopefully, are changing. We do pre-recorded walkthroughs, which we told you about. We're doing the virtual Zoom open houses and virtual tours. We have the online photos on almost all our listings. And like I said, we're doing live FaceTime walkthroughs if the homeowner is allowing you into the house. We do recommend that you take a drive by the home just to see if the location is good for you. You can see the outside of the properties, and maybe it wasn't, you drove by and it was on a corner that wasn't for you, so it's really important that you at least take a drive by the home and start off that way. Okay. there's also, if there is a meeting that's set up between the buyer and the seller, then we ask that the buyer please be cognizant of the person that lives there. And you need to put on a mask, gloves, and booties. And if you don't have booties, to please take your shoes off. And we are allowing 2 buyers per visit. So if you are more than 2, hypothetically, if you're 4, we would do 2. They would do 2 at a time. 2 would have to wait outside, and then you would go outside and then bring in the other 2 at that point. Not too many at the same time. And if the buyer's interested in the home at that point, then we can negotiate from there. We would have the conversation with you. It's really just opening up the house, again, if the seller is allowing that to happen. And then what happens with the home inspection? A lot of people are asking this question: what if I like the house? And what if I get an accepted offer on the house? What's next? Well, what's next is, yes, you can have an inspection done. That is very doable. And what will happen is the homeowner is not there. But you know what? Typically, a lot of my homes, the homeowners are not there during an inspection, whether we have a pandemic or not. They don't, a lot of homeowners don't feel it's necessary to be there. So that hasn't really changed that much. When finally you have everything done, you get your mortgage, and you have to do a walkthrough right before you're ready to close, the difference with that is the homeowner cannot take you around the home and do the walkthrough. We recently just had that done, and basically at that point the home is empty anyway. So what we did was we had the key set in a location where the buyers can pick it up, and we FaceTimed through the walkthrough with them, and everybody was quite happy with that in the end. Everybody has to make a few adjustments during this time, a little give, a little take here and there, but I personally have had 4 closings during this pandemic, and we've all worked very lovely together. As long as everybody understands the information, and there are, certain rules and regulations to go by, there really shouldn't be any uncomfortable transactions. As long as we understand what we're doing, and everybody has the same goal in the end. Everybody wants to be happy and get their dream home and have an easy sale and an easy purchase. There shouldn't really be any situations that arise as long as it's done properly. Okay, so now Jennifer's going to talk a little bit about how to stand out from other buyers in this market. So Jen, you're on.
Great. Thank you, Robin. So as Robin mentioned, things have changed. One of the things that we all really need to focus on is being a little flexible. But to start off, if you are a home buyer and you want to stand out from the other buyers, you want to have your offer be considered and be strong going in to purchase a home. One of the things that really is needed is a recent pre-approval. So some home buyers started looking a few months ago before this pandemic started, and were pre-approved from their mortgage company. Unfortunately, those really aren't any longer valid. You would need to get something even within the last few weeks. Ricky, now he will discuss that in a little more detail and tell you what has actually changed for the criteria. As mentioned, you do need to have that flexibility. Even if you've purchased a home before, it is very different. Whether it's looking at a home, doing the walkthrough, if you have the inspection, everything has really changed. So that flexibility is important for both the buyer as well as the seller. An important thing, have a knowledgeable realtor to guide you. Very, very important. We are daily and sometimes multiple times each day on various conferences, whether it's about recommendations on how to open up the real estate market, what the restrictions are, and they do really change almost on a daily basis. So you really need to stay on top of that. We are absolutely here to help you cull down your criteria for a home, teach you and show you how you can view the homes, because as Robin mentioned, each homeowner is different. Some may feel comfortable allowing you in and they'd love to show you their home. Other people would feel more comfortable, at least initially, with perhaps just photographs or a video tour, or perhaps even an open house, a live open house. But for myself, Robin, we're here to kind of support you every step of the way, but not only to be with you every step of the way, but to also keep you safe at that same time. With that said, I would love to introduce Ricky Jarvis. As mentioned, he is with Citizens Bank, and he will give us a little background as to what has changed in the industry and what buyers can do to set themselves apart. Ricky, off to you.
Thanks so much, Jen. And thanks again for having me. This is wonderful. We got a great turnout here and a great panel as well. As you can see, before I get into the details, this panel is amazing, and it's important to have all the right players on your team when you're buying a house. This is one of the biggest financial decisions of your life. It's very important. You've worked hard for your money. So you need an attorney, you need a realtor, and you need a mortgage guy. You need those people on your team, because especially right now, things have changed, and we are aware of all the updates, and we do this every day. You know, personally, I do over 100 closings a year. So I say that because I do this all day, every day. Residential mortgage is what I do. I love working with first-time homebuyers. I can relate to first-time homebuyers. I've purchased a few houses myself. I'm currently in contract on a house right now, and I'll tell you why it's important to get into contract and lock in your rate in a little bit. But first-time homebuyers have a lot of questions. You know, it's an emotional process, and again, you've saved your money for this special time. So I have the patience where I can walk you through each step of the way with the attorneys and the realtors. And another thing is sellers. Sellers, when you're buying and selling at the same time, is a work of art. It's really got to be strategic. You need the right players on your team. You need me to kind of figure out how much you're going to net from your sale once you pay your realtor, once you pay your mortgage off, once you pay your closing fees, so we can figure out how we could structure your purchase and make sure that that's going to work out before you put your house on the market. So all of these things were all commingled, and we communicate really well, making it an easier process for you because there's a lot of moving parts. That gets me into, it's never too early to get pre-approved, whether you're buying in 6 months, when you're buying in 3 months, if you're potentially looking to sell. We got to figure out your finances, especially right now with things changing, as well as interest rates are very low right now. So I'll go over rates first, and then I'll kind of get into what's changed due to COVID. Interest rates are very low. So as Joe mentioned, we're looking at 30-year fixed in the low 3%. So 3.125, 3.25 for a 30-year fixed mortgage. So what does that mean that rates are low? It just doesn't mean rates are low, and that's great. So rates are low, and that helps your affordability, number one, on your monthly payment. It also helps your affordability on the amount of house you can purchase. So a thing I like to always mention is a 1% difference in interest rate is a 10% difference in purchase price. So we'll use an example of, let's say the interest rate was 4.25 and the purchase price is 500,000. The difference between 4.25 interest rate and 3.25 interest rate is a $50,000 difference in purchase price that you can afford. So that right there, with these low interest rates, it can bring you to a property that you may not have thought you could afford, or you may not, you didn't want to spend that much money, but now you can because the interest rate's so low. So it's really, really important to take advantage of these low interest rates. Pretty much some of the lowest interest rates we've seen in history, and should stay here. But like Joe said, we don't know where exactly the rates will go. It's day to day, and they could go up. So it's a good time to take advantage of these rates. What's changed in the industry is everything's bank to bank. So I'm a loan officer for Citizens Bank. And Citizens is very well positioned in what's going on. We're still doing 95% financing up to 850,000, and we're doing 10% down, which is 90% financing up to 2 million. There's articles around that Chase Bank no longer does mortgages unless it's 20% down and the credit scores are 700. So even if you've been pre-approved, you need to reach out to, maybe it's the person who pre-approved you, to see what updates there may have been, or feel free to reach out to me. I'd be happy to speak with you, get you pre-approved, tell you what the current interest rates are, tell you what you can currently afford. This way, you're positioned well, because I think once these floodgates open, me personally, I've been doing pre-approvals at least 2 a day, sometimes 3 a day. There's a lot of buyers that are excited to take advantage of these rates, and there's a lot of buyers that are excited to purchase a house at this time. So I would just say it's always good to be prepared. You're better off being prepared and better off having the players on your team so that everyone's prepared and we can make it as smooth as possible for everyone. So if anyone has any questions, I see one question in the chat. Yeah, if anyone has any questions, type it in the chat. We'd be happy to help answer those questions. And from here, I'm passing it over to Leo.
Hello. So as mentioned before, you can call me Lenny. I'm a real estate attorney. I've been practicing for 16 years, doing real estate related transactions, commercial, residential, including title insurance, defense. Pretty much what everyone's saying, is being prepared when you're starting to look for a home and getting your team in place is very important. Have an attorney in place, to have that so you can get to the contract, get into the process much quicker, in order for you to purchase, because it is, as mentioned, Joe, Robin, Jen, shortage of inventory. So you'll have more people looking at less houses. So you want to get the process moving as quickly as possible. Also, as Ricky said, it's important to be prepared. As an attorney, if I'm representing a buyer or a seller and they come to me with the pre-approval, the question is who they got the pre-approval from, what was done, did they collect all the documents, meaning your W-2s, your tax returns, your credit score, or do they just ask you for a credit score to run your credit? You got a credit score and they just asked you how much you could afford, and that was it, and that's your pre-approval. I always recommend to go to somebody like Ricky, because he will do the full gamut of your financials, so you know exactly what you are going to buy and what you can afford. It's very important to do that and be prepared. In this day and age, obviously the COVID-19 and pandemic is a big issue on people's minds, and how are attorneys addressing this and how are we handling this? So essentially, in terms of the contract process, we have now a rider that was put out by the New York State Association of Realtors, and we're using that as well, and we're also modifying it depending on the deal, but it's basically a COVID-19 clause saying essentially that the seller and purchaser agree that the dates in the contract that are normally agreed to, let's say 60 days to close, will be extended a certain amount of time depending on if there are any issues that arise due to the pandemic. If it goes beyond that time, so let's say we agree to close in 60 days and we put another 60-day extension or 30-day extension. If it goes beyond those additional days, either side can cancel the contract and the down payment will be returned to the purchaser. So this way it just protects everyone in terms of delays that that could drag on forever, which you don't want. You don't want your money tied up. The seller, if the purchaser can't buy, or if you can't buy, we want an ability to get out of the contract. The seller wants an ability to get out if the purchaser can't buy, and they can move on as well. The other clause that's included as part of the COVID is if your financial situation changes as a purchaser, that we can cancel the contract due to the pandemic. You lose your job, your income is reduced, you're laid off, you're furloughed. Those situations gives us an out to get out of the contract in order to get your down payment returned to you as a buyer. If, for example, you quit your job because, hey, I want to quit, I can make more money on unemployment, that's not a reason. And that clause will not apply. But it's really there to protect the situation, the unknown. In terms of how long that we would keep these COVID addendums in the contracts, I feel right now it's going to be at least through the end of the year to early next year that these type of clauses will be included in contracts, just to protect everyone, because as Ricky can attest to, transactions are still closing and they're literally verifying your employment the day of closing for buyers. So if your financial situation changes the day of or the day before and it's not the same, you will not close. So that's why these type of addendums and clauses are important to have in contracts. Other things right now in terms of the pandemic and what I'm seeing as an attorney are title searches being delayed. And a title search, as a buyer, you always want to have a title search. The bank will always require a title search. It's to make sure when you're buying that so that we know if there's any liens, judgments, the mortgages that are on the property that you're buying, so we can make sure those are all taken care of prior to closing, so you don't have some random bank or court come after you saying, these weren't paid off and now I want to foreclose against the property. So that's the purpose of a title search, make sure there's no liens, problems with the property in terms of your ownership. As everyone else is operating from home, so are the towns. So the towns are limiting the amount of searches that they can do. Some searches are taking much longer than others. We've been trying to find ways to work around it, such as finding old title reports and getting updates via email from the town. We've done that on a few closings. There are ways to get past this, also depending on the lender. If there is, as far as we know, no issues with COs and everyone's kind of comfortable with it and the lender is willing to do it, we can, sometimes the banks will waive those searches. But there's ways to get it closed, but obviously I would have to, or any attorney would have to explain all the ramifications of what, if we do a partial search or versus a full search. Other questions that are coming up, how are we actually closing? So what everyone says, the first thing that comes up, power of attorneys. Can we use power of attorneys to close so no one has to be in the same room with each other? Yes and no. As a buyer, your use of a power of attorney is much more restricted because the bank wants an original signature from you. They don't want it by a power. Because the power of attorney, there's a lot more potential fraud. So usually as a buyer, the bank will want you to attend or sign in person, have an original, what they call a wet signature. And the way we are working with that is a few ways. Most states, let's say outside of New York, a lot of states are what they call escrow states. So they send everything, they do everything by mail. We mail it to everyone, they mail it back to the title company or one central attorney. They collect everything, and once they have everything, they disperse and we close. New York is starting to do that now and get on board with that, depending on the parties involved and whether we have enough lead time to get that done. So it always helps to have an attorney, whether it's a buyer's attorney, sales attorney, to discuss that in advance. If that's something that we want to discuss it with Ricky. If that's possibly with the bank attorney, if we need to try and arrange an escrow style closing. It's just a lot of lead time, and you need at least a week or two to get that date set in advance to get prepared. So it's difficult, but it's very doable, and I've done them as well. The other thing is, I'm sure a lot of people have heard of people closing in parking lots right now. I've done a few of those as well, basically so everyone's not in a conference room or in a small office. Some of the parties might be outside and spread out in their cars, and we sign the paperwork there, and we do what we need to, so everyone's socially distanced from each other. For example, I did one with a seller. I had the seller pre-sign all the documents so they don't have to be there at the closing. The seller can pre-sign the documents, so as a seller, that is doable. And then I attended the closing and basically handed a package to the title closer. She went upstairs to go finish the closing with the buyers and the bank attorney. So it was less people in the conference room, and I just basically waited outside. And then when they were done, they brought all the signed documents to me, and we were closed. Other ways, we find offices, whether it's an attorney or the bank's office or the title company, where we can spread out. So the sellers are in one room, the buyers are in one room. The buyers are usually in the room with the bank attorney and with their attorney. I believe New York still is restricting real estate brokers from not coming to closings, so there are less bodies in that respect as well. So there's ways to work everything out, and we've been working it out. I literally am having a closing, a refinance this afternoon in my backyard. You can do it outside and you spread out. So there are ways to get it done. But as a buyer, usually the bank will require you in some way or form to have that original signature and not necessarily a power of attorney. So that's just something to be cognizant of. And just also, most buyers, a lot of times, even if you're a first-time home buyer or may feel like you're a first-time home buyer, a lot of times you are also a seller. You have to sell first to buy. So I know we're talking about buyers here, but it's also recognized if you have to sell, you have a team in place as well that will help you. Everyone here can guide you in that process as well. And especially you want a team to represent you on the buy and on the sale, because a lot of times the two have to be coordinated with each other. That's something just to consider. And in terms of being prepared, going back to Ricky and Robin and Jen and Joe, we were talking about the mortgages and the interest rates. They are very low, the interest rates. It's a great time to buy. And one thing to also on Long Island to consider are taxes in terms of your payment. So that's why it's very important to go to Ricky, get your financials in order, have everything in place. And when you go to look, you're taking into account not only the mortgage payment, the escrows for the taxes, because that will determine where you should be looking and what you can afford, and would make it much easier when we enter into a contract to have less problems as we go to closing, because the financials are, changing on a daily basis with banks' requirements, and that's what Ricky would be there to guide you to make sure that we don't run into that issue of any financial change that might come up at the last minute closing that can cause problems. If you have any questions, you can put them in the side. But thank you, Robin, Jen, for organizing this. Richard and Joe, thank you as well.
Thank you,
Thank
Lenny.
you.
That was wonderful. A lot of information from all of you. Greatly appreciated. I just wanted to know, Ricky, if you could just touch a little bit about, or Lenny, about, well, two things actually. Lenny, what is about,
Some of the closing costs.
what kind of closing costs? Sorry, Jen, thank you. The closing costs. Can you, not that we're asking you how much closing costs are, but what is in the closing costs?
Okay, so the closing costs, and first off, as a buyer, includes the bank fees. So the bank fees could be range from application fees, appraisal fees, origination fees, the bank attorney fee, which is the responsibility of the buyer as well. All the bank fees are there. And then you have the title costs. So the title includes the title policy for the title policy for the bank. So it's called the loan policy. And then you have the owner's policy and the searches. So normally the town searches and all of that. And those town searches run a couple $100. The title policies themselves are based upon the purchase price and the mortgage amount, so they vary greatly. And that also then lumps into there the taxes that you have to pay. There is a mortgage tax in New York. It's 1% of the mortgage, but you pay 3/4 of that percent, and the lender pays 1/4 of the 1% in the mortgage tax. Also, you have the legal fee, the attorney fee, my fee as a buyer, and that's pretty much it in terms of the buyer. It's a lot of fees, and when you go up with Ricky, he can give you a loan estimate or a closing disclosure of all the fees.
Great.
And he estimates all of that for you in advance. So we can get an idea, and your brokers can go and look up the taxes on the property. We can all find that out to give you an estimate of what we expect the closing costs would be prior to, or even while making that offer. So you have an idea. Is it exact? No, it's an estimate. And a lot of it depends on what you as the buyer are doing. If you want to buy down your rate for some reason, or your credit score is not good, or it drops, that can affect the closing costs. So It's always an estimate. It's a moving target until we get to closing, but there is a range of where those closing costs will fall in.
Great.
Um,
I have a question for Ricky. Possibly you can help us out with can you explain to these buyers the difference of how much if someone's putting down, say 20%, or if they're putting less, or if they're putting more, what would make the difference in that?
The difference in monthly payment?
Oh, well, in the down payment. So if someone was putting down 5% as opposed to someone putting down 20%.
Yeah, it's a big difference, and it's going to be determined by the price, right? So if you find a house for 500,000, I just like to use simple numbers. 500,000, 20% down is 100,000. With rates being so low, if you can take advantage of the interest rates and the ability to put down less if you qualify, it's not going to really impact your payment too much because the rates are so low. So 20% down on 500,000 is 100,000. 10% down on 500,000 is only 50,000. 5% down on 500,000 is 25,000. So
There's PMI if you put down?
yes. So anytime you don't put down 20% down on a purchase, there will be most likely PMI on the loan. PMI is going to depend on your credit score. It's going to depend on your debt to income ratios. And that number, it's actually reduced. So on something like 500,000, if you put down 10%, the PMI, I'll probably be around $120 a month.
Can you
Is there
actually
upfront
explain what
payment?
PMI is?
PMI is an insurance that the bank will charge monthly because of the risk of the loan. When banks lend, they lend on risk. So when they see 10% down rather than 20% down, you have less equity in the house. So they're going to charge an insurance until you get to that 20% equity. So as long as you're in a conventional loan, once you do get to 20% equity in the home, you can either do an appraisal on the home. And when that appraisal deems the value is your loan to value is 80% of the value, the PMI will drop off. In addition, if you just don't do that appraisal and you continue to pay your mortgage, once you get to 78%, it'll automatically drop off. So it's just an additional insurance that the bank charges monthly as with the lower down payment.
And can you tell us a little bit about the FHA loans today, if there are some changes that have been made during this pandemic?
Yeah, absolutely. So FHA is another great option. They allow for 3.5% down, which is a very low down payment option. And the rates are very good. So you'll see rates around 3% to 3.25% with 3.5% down. Again, you do have that PMI, but like everything else, the requirements have been changing a little bit. And again, it depends where you go, but the minimum FICOs for FHA are about 660 at Citizens currently. We used to be able to do 620, but with everything going on, they've tightened up the guidelines a little bit, and now it's 660. So you'll see tightening of guidelines throughout. Like I said, Citizens is positioned very well. Many other banks are doing a lot more tightening, which is depending on your situation.
What do you see changing in the jumbo loans?
The jumbo specifically is what's being impacted so much by other lenders tightening up. So anytime the loan is over $510,400, it can be considered a portfolio jumbo loan. So this is where the marketplace gets very different. Like I said, Citizens can do 5% down up to $850,000 loan amount. So that's about a $900,000 purchase with 5% down and about a 3.25% rate. We can do 10% down up to $2 million. So what we've been seeing really is, like I said, Chase is no longer doing anything jumbo unless it's 20% down and your FICO is 700. So that was definitely a strict change. A lot of these banks are no longer doing cash out refis. And yeah, so it's really the down payment is tightening up their requirements. You know, I don't like to pick on banks specifically, and I don't know the.
Overall, though, we're seeing a lot of the banks
Yeah,
tightening up on a lot of the different loans that are out there.
yeah. So
And
right.
working with Ricky, with his bank, they really have some really good plans out there for buyers, first-time buyers, and all the jumbos, the FHAs. They're still working with all of them, and they have excellent programs.
So as Ricky was just mentioning, because of all these new guidelines and restrictions, it's key to make sure that you have an excellent credit score, to do everything you can to get that credit score up to get the best possible interest rate.
Yeah, and
And
again,
obviously, to have the very recent pre-approval.
yeah,
Yes.
and,
Makes a huge difference if you want to put an offer in on a home.
yeah, and if you're not, you know, you may not want to get pre-approved for, or you may not want to buy a home in, let's say, till 6 months. We'll get pre-approved now. Let's make sure the credit is where it needs to be, and if it's not, maybe we can work on getting that score up so that when the time comes, that you're prepared.
If there's any, let me see, Jen, do we have some questions in the chat room or?
I saw one that said the percentage of closing costs for a seller. I know I discussed the buyer. I can go into the seller briefly. The seller, it's the real estate broker fee. And then usually there's a transfer tax in New York, a New York State transfer tax in Nassau and Suffolk County. That's $4 for every $1,000 of sale price. So if you sell a house for $400,000, you're paying $1,600 in a transfer tax at closing. And then usually there are some title fees in terms of a recording of satisfaction if you're paying off your mortgage. But the seller side is a little more simple when it comes to closing costs. If there are judgments or anything against you, or if you haven't paid your taxes, those will be collected at closing and can significantly increase the closing costs.
An additional question that just came in, which is great. What is considered a good credit score?
A good credit score would be considered, I would say 700 and up is a good range. We can still, like I said, do 660, 680, 690, but the better the score, the better the rate. The brackets, they go from 740 at Citizens is the maximum bracket. So if you have a 740 credit score, or you have a 790 credit score, we're going to give you the same sharp rate. And then it goes 720 to 740. There could be a little variance, 700 to 720, 680 to 700. So you always want to keep it as high as possible or over 740. But great rates, really anything over 660, 680 is going to be great rates as well. I saw someone say what percentage of buyers are purchasing all cash. I don't know the percentage. Maybe
That's a tough question. You can't really
Yeah.
answer. It's on a case-by-case basis.
what I would say to that is that with the rates being so low, it's, you know, even if you have all the cash in the world, it may not be in your best interest to buy all cash because, you know, we talk about the 30-year fixed is about 3.25. If you look at some other products, let's say a 5/1 ARM, which is a fixed rate for 5 years, or 7/1 ARM, the rates can be as low as 2.5%, 2.625. So at that point, after your tax write-offs, and you know, you're probably better off taking advantage of the bank's money for the short term.
Any other questions out there that anyone would like to have answered?
So there are some specific questions on sales that we will definitely, you know, try to address after the fact, just because this is more geared towards the buyers. Pardon me. One question was, does the rate change if you desire a 15-year mortgage as opposed to the 30 that we've been talking about?
It's a really great question. Yes, not only does the rate change, but the payment changes. So that's important to realize is let's take a 30-year fixed at 3.25. If you're doing a 15-year fixed, you're probably at 2.75. So you could take about a 0.5 point percentage off. So your rate's much better on a 15-year fixed, let's say 2.75, but your payment's going to go up because you're cutting the loan term in half. You know, if you amortize the loan over 30 years, it'll take you much longer to pay off, double. So your payment will be less. So yeah, your rate is definitely better on a 15-year, but your payment is higher.
Okay.
Ricky, can I ask a question for you? As a home buyer, as a buyer, what documents should they have ready in hand to give to you in order to get the pre-approval?
Great question, Lenny.
A great question. So the simple list of documents to prepare is your W-2 forms. If you're an employee, doctor, police officer, firefighter, teacher, you're just going to have your W-2 forms. So 2019 and 2018 W-2, 2 recent pay stubs, and 2 months of bank statements. The bank is going to look at your income, your assets, and your credit. If you're self-employed, that's where the documentation is definitely a little bit more intense, especially right now. We're going to need your tax returns. We're going to need your K-1s, potentially your business tax returns, profit and loss statement, balance sheet. So self-employed is definitely where the documentation is much more, but the basic list is W-2s, pay stubs, and bank statements.
And is there
Great.
any other questions pending out there, Jen?
There was one other one that came up, and I think this is a pretty general question that most home buyers and sellers are asking is, are there a lot of buyers out there, or have they dropped off due to the virus? Great question.
Great question. So basically what we're seeing, and real estate doesn't change. It's always about the same. It's always about supply and demand. So we are lacking the supply and we have a heavy demand, and our interest rates are low. So being that said, it drives up the prices. However, we're really, we're also in a different situation. We're in a pandemic. So there's a lot of different thoughts out there. I mean, I've had buyers calling me in so many different directions. I have buyers calling me and saying, oh, we're in a pandemic and I guess I can get a really great deal on a house now. Well, that's not really accurate information. It's just like if we weren't in a pandemic. It's the same thing. It's supply and demand. So again, we are lacking the supply and we do have the demand. So no, it's not the market where people can come in and get that amazing deal on a home because they think that the situation that we're in, they're going to get these amazing deals out on the market today. That's not to say that some homeowners aren't willing to look at offers of all sorts. It's really completely up to the homeowner at that point.
There is no fire sale at this point, and we have true buyers out there.
Every situation is different. I'm sorry, Jen, go ahead.
No, I think the buyers that are out there now are very serious and are committed to purchasing a home and aren't there to kick the tires, let's say. But we have to see how all this pans out with showing the homes. And there is no fire sale that some buyers are kind of feeling like you're not getting a,
fair market value pretty much. Yep. So basically also, as Joe had said in the beginning, which is a real change, is the fact that this pandemic has shown companies as well as employees that it's very workable to work virtually in many situations. So people that needed to commute, they're seeing that they may not have to commute at all or as much, and that it is more doable to move out to the suburbs and have a backyard and live this way and not really have the commute like they did. So that really changes a lot of factors here. And a lot of people coming from the boroughs, Queens, Manhattan, Brooklyn, that now they feel, wow, I can leave. I won't have that commute, because the commute is really what holds a lot of people back from living on Long Island, because they want to be with their families, and that extra commute really makes a big difference. But if they can work virtually, they really don't need to worry about that as much. And it does definitely, it's a game changer and a lot of factors here. big part of it. Big part that we see as a big change in this situation. And we also see that everything virtually will, now that we see that we can do so many different things virtually, it may just stay this way in a lot of scenarios. We may not go back to our old ways in many areas.
Yeah, and just in terms of that, you know, like I've said, we're doing refinances are a little bit easier to do virtually than closing because less parties to coordinate. I've done last week, I did a refinance. The client was in Brooklyn and we did a Zoom call and record the whole Zoom, watch him sign everything, sends everything back to me. I notarize it, watched him sign it. And there are ways to get it done. So as a buyer or a seller, if you're concerned about the pandemic and getting paperwork and things done, there are ways we can work, everyone can work around it now to get it done.
And I would just like to add to that, you know, our office in Plainview at this time of year would typically do probably 40 to 50 transactions a month. And since everything got shut down in mid to late March, we've done about 40, 45, 46 transactions. So the demand is still there. The need to buy and sell is still there. We're doing things differently, but the need is still there. And if you're one of those people that's on this town hall and you have that need, again, I'm going to bring it back full circle. The reason that we wanted to do this was to let you know that it can be done, and you're surrounded with great people and a great team that can take you from point A to point B and really make it a smooth process given all of the changes.
Great, thank you. Thank you. Is there any further questions out there?
I think that's it for the questions. If anyone has any future questions, you can certainly respond to Robin and I. We can pass you along to the appropriate party. We would like to, of course, thank our speakers, Joe Toscano, Lenny Greta, and Ricky Jarvis for joining us today. We appreciate all your information and time. And honestly, thank you to all the attendees. You know, we obviously feel like we've given you important information, not only how to navigate this new real estate market, but to kind of give you a little insight on how this whole process works. As we know, the rules and regulations are changing every day and sometimes multiple times a day. So we are all here for you and any of those questions.
So feel free to contact us every day, any day. It's never enough questions that we can answer. And because, again, like Jen said, it does change on a daily basis. We will send out to all of you everybody's contact information if you'd like to reach out to Lenny, Greta, or to Ricky Jarvis. If you have questions for them, they are just like Jen and I, very responsive, and they are here to answer any questions that you may have. They're very lovely to work with. And again, we're all here for you. We're all in this together. And we're just here to help each other out in the long run. That's really what this is about, is to really help you to understand what's happening out in the real estate market. And if we didn't cover all your questions, or there's questions that come up, which does in this market, especially when you're purchasing probably the most expensive, biggest asset in your life, we just want you to know that we're really, truly here for you to help you get through that. And there's no silly questions, and there's never too many questions. We understand completely, and we're just here to help you. I think there was one more question that popped in. Jen, am I correct or no? No, we're just getting it.
Everything.
You're welcome. So
Very
thank you
good.
so much.
Thank you all.
This was a pleasure. We hope to do this again. We'll probably have a part 2. And thank you, and have a lovely evening.